Rationalmr.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Happy Monday morning. Hope you're enjoying the frivolity of the markets. Where are we here? Coming in on the tail end of this month of October, eh? Geez, that sure passed quick. It doesn't look like there's many people watching. It was nice to see. We got a couple OGs back in the room here today, so good to see. And there's a few people over there on YouTube. I don't know what I can really add to the equation here. Next week we finally have that big eclipse. Interesting how it comes right on Halloween. And I can feel the tension of everything sort of building. I don't really want to make any grandiose predictions or prognostications until we're sort of on the other side of all this event. And then what a big surprise, the FUMC comes up basically right following that event. So this should be an interesting week. We did have that options expiry happen on Friday, and actually I was a bit surprised. They did, and I think I mentioned this in the video yesterday, they did keep the market above the really big strike at 420, but the sort of gravy trade, 425, they couldn't get the S&P above that level. So I think Wall Street was exercised on quite a few put options. And it didn't surprise me to see first thing out of the gate. Where are we here? The stock market actually opened up weaker, and we went and took out a double bottom low, which is interesting, right? We were able to get up to 2.618, then stalled. And interesting how 2.618 off of this M top. Do you include that wick in that study? I don't know. I'm still, as a student of the market, still trying to figure that out. It's interesting if we go off of that high. Did that low get traded to? And was that level validated? What I would just simply say is they ran these weak stops down in here on that event. Wall Street, of course, was exercised. They're like, just get me the hell out of the market, clean up, clean up, clean up. And then as soon as that was done, a ratchet right back into resistance. So I don't know whether this 2.618 has been completed or not yet. So I'm still sort of humming and hawing about that. If anything, what should probably happen here is maybe like a nice little inverted head and shoulders pattern. You can see these 8s and 9s on the Tom DeMark. Basically going to be bumping up against the bottom end of this channel and the 13 EMA. And if we go sideways for a couple 4-hour bars, that might set up a nice little inverted head and shoulders, which can take us back up into sort of original structural fail levels. So we'll see how this goes. But this image, if anything, a pretty good testament to this image. Breadth right now is negative. The slow moving average is rolling over, and actually its slope is now starting to point back down. So my hunch here is a bit of back and forth. We got to get this slow moving average down into the oversold camp, into next week, into that big eclipse event. And then my hunch is that they're selling the market off into the Fed. And ironically enough, that actually would be good for the market on the other side of the event. If we actually see that they start to rally the market into the Fed announcement and we turn into some, big honking rally, that I think actually is bad, because the old expression is, buy the rumor, sell the news, sell the rumor, buy the news. This Fed event coming up here, I think, is pretty significant in the market's eyes. Fedsters are saying, well, we've been telling you we're going to raise rates all along. So if we don't raise rates, we're going to be looking awfully foolish. So in a weird sort of way, they've kind of painted themselves into the corner. We could probably, I think this was our eclipse window kind of references. And as I said, Fed announcement just shortly thereafter. I think it's the second, third, but I'll have to get the number exactly. So let's see what happens. I would actually prefer that they keep the market down on its knees into that event, and then put in a nice bottom, wash the whole market out, and we can start our seasonal rally by when it snows and all that kind of fun stuff, and probably a revisit of these levels up top here into sort of like, big November, Black Friday, Cyber Monday, all that kind of stuff. And maybe that creates some sort of massive inverted head and shoulders on the daily charts. But I mean, we'll cross that bridge when we come to it. If they just crank the market up here into this window, then I think that actually portends for another leg lower following that. Anyway, we'll watch and see how it goes. I'm hearing or reading, I guess is probably the better way of saying it, that things in the the whole Israeli situation is somewhat calming down. I don't know whether it is or not. Who knows over here? A million miles away, would we actually really know what's really going on over there? But you can see the crude oil market is coming off a chunk here. Demonstrator of best practices kind of idea. We did take the opening range trade, but it was a Monday, and I really didn't like the way that this was setting up. So I just paper traded it, and sure enough, the opening range trade failed there right out of the gate, being a Monday morning. That really doesn't surprise me. And actually, what I kind of saw was just a whole bunch of stopwashes all over the place. Market not really knowing exactly where I wanted to go. So, we did come against these overnight lows that was put in at like 5 o'clock. And then we also had this low here at 4 o'clock, my time. The opening range trade was all right, go long here. And it was sort of like, I don't know. Sure enough, boom, boom, boosh, doosh, they slammed that. They took the market appreciably lower. So on a Monday, I don't, really don't want to rock the boat. Don't want to start things off on a negative note, especially with live trading. So just kind of just watching. And as I said, paper trading. This actually wasn't a bad little trade level to consider getting short off of. It actually painted a really nice little inside bar 3-minute fail. And that was, where was that? Up here, I think. Can't remember. Yeah, right here. So this actually was the trade that I really wanted to try and hunt this morning, because we had this big market structure failure here. So anyway, actually, that might even be the previous day. Beg your pardon. Kind of scatterbrained here. Monday morning. Yeah, there. I guess that was the trade there. Right? Nice little fail in there. I beg your pardon. There it is. There's the inside bar. And actually, Chris and I were even watching that. I was a little disappointed I didn't take that. But anyway, watch sort of a consolidation. But like, what a great analogy of the FU moves. FU against these lows. Then okay, well, we're gonna bottom it out. All right, here we go. And then boom, another FU. And then okay, well, maybe we're short now, so another FU. Then I saw this basically reload zone, just a retest of this original inside bar. I really like the idea of this short, but this is a really, really big short. So I couldn't justify doing like real money because it was basically playing this massive M top. And actually that is, let's see if I can show you this trade. It's a huge trade. So this big M top that set up this bearish bot A, B, C, D, take us down into these levels. So I did strap on a couple of the micros because I mean this is like 60 cents on the big boy. That'd be like $600-700. Risk on one contract is way too much. So there's like $60-70 per contract risk on that for the micros. So strapped on a couple. So it's $150-200 risk. Took one off here when the market puked out and broke through actually this tail low here. Dumping down, move my stop to basically scratch, because on the bot, you're supposed to move your stop to scratch at that 50 level. And we'll just ride it. You can see there's the take profit level, a couple $100. It's also ATR level, which is interesting because this is like bear A, B, C, D. This would be a PRZ. And also too, we have a horizontal support and resistance level, and we've got a couple POCs. So I actually like the idea of being a buyer down in this area. And as well, and I've often said this, although it's a bit cheeky, the whole Top Step Combine kind of thing. I actually like the idea of just subscribing. I think it's like 50, $60 a month or something to do it, just to get Hoag's levels. Because Hoag, I mean, the guy's like a 40, 50-year market veteran. He knows his shit backwards. And he spits out weekly trade levels that he would consider important. So interesting confluence, right? We've got bear A, B, C, D objectives, PRZs. We've got the ATR script. We've got horizontal support and resistance. We have two POCs. Tupac Shakur. So, I mean, that's a confluence of levels. So I actually like the idea. I was, humming it on. Like I said, way too big to actually strap on and actually I could have probably done it for the combine, just, risk that double top breakdown. But anyway, I paper traded it. So took one off, got one left on the books, basically stops at scratch on this thing now. And we'll just see where the hell this thing takes us. Anyway, so interesting to see the crude oil market softer here today. And I actually noticed this. I was a bit surprised driving with Liam yesterday, and Liam was in good spirits. So all of your best wishes and good karma wishes and stuff, I think, paid off. So thank you very much, all of you out there in the universe, wishing us a good afternoon. But I noticed that, like I said, stock market, a lot of options expired in the money. So it didn't surprise me the stock market did open up lower, kind of jackknifed off of those lows. Was this on a reaction of the crude oil market? Market kind of breathing a sigh of relief. It's interesting to see the gold market also looking very M-toppy here. In fact, this is basically the same trade. So if we felt like it, we could probably go like A to B. C to D, and that paints a downside objective here about 1960 or so on the gold, and you can see there is actually a fairly well-defined M top there. In fact, actually, let's see where the bot actually, oh wow, this low goes all the way down to here. So that's a little bit of an error on my part there. But let's project that, and oh wow, look at that. You can see where the bot level is. So this is, and actually, this is looking very similar to the crude, where really what we're saying here, and you can see I already have my little buy note where I think I can step in on the long side against these lows. Again, couple POCs, horizontal support and resistance, original market structure bottoms. Wicks and tails like to be eaten, a whole bunch of trap bears in there that would love to get released. And of course, one high, two highs, three highs. I think I could actually justify taking that short there on the gold. So interesting how we're seeing this more and more over time, where the crude oil market and the gold market, or basically the commodities markets, are all starting to sort of move in unison again. And interestingly enough, that's actually the hallmark of the greed cycle, which theoretically we entered into, like 5 years ago now. And that cycle should go on until 2035. So that's another 12 years. And I was very skeptical about this this gold bull. I don't, I'm from Missouri. I mean, maybe you got to just show me. But I didn't really, what I saw was a market that absolutely got totally bitch slapped. Huge bear ABCDs and, beautiful target. Great testament to harmonics as a potential reversal zone. Well, that sure as hell reversed off of that level, no doubt about it. Cleaned up a whole bunch of weak stops. There's probably a bunch of liquidity pools all in here. people that sort of came late to the party, boom, they just clean out all those weak stops. I don't know whether I really consider that a new bull market, though. To me, all this looks like is it's just rallying up into this key resistance level. And maybe, if this really is a bull, maybe we carve out some massive head and shoulders pattern, which means we probably need to do something along those lines going forward here. Again, it's Monday, so Monday is kind of a wonky day. And then to add insult to injury and this sort of liquidity hunt, stop loss hunt, traders kind of messing around, didn't want to really take too much, didn't want to take any risk in like live money. What a big surprise, when I go through my daily routine, first thing in the morning I have to do is ask, okay, well, what's actually going to drive the market here today? And you notice first thing out of the gate, not really much. I mean, they're talking about the 10-year US Treasury hitting 5%. We see Japan was down about 260 points on the day, and a whole bunch of meh. And what is interesting about this is the Chinese stock market, as guys like Peter Zahn and stuff have been suggesting recently, there's no bottom anywhere in sight over there. So I don't know whether I certainly don't believe that there's some sort of, new bull market here going on in the stock market. I mean, look at that. I mean, it just looks like a train wreck. Lower highs and lower lows. I think Wall Street did have to liquidate a bunch of stock right on the open, which caused the dump. And then once they were done, sort of created a vacuum, because I would imagine not a lot of retail sellers are going to want to come in and sell down here. So wishy-washy, but I'm from Missouri. And the fact that we didn't, if you look at this daily chart with that chaos level, has not been traded to. If anything, I think they're setting a trap here. And what I also noticed too, which is a little bit suspicious, if this is a bottom, okay, well, they're starting to form now. But when we did get that initial dump, I didn't have any signs of divergence. And I guess Willie did get stupid. So we do have the makings of some sort of bottom down in here. But I wonder whether that 2.618's got to be tested. And the absolute minimum that we have to see, I mean, you see this, how long it took this W to form to actually start this rally. I mean, all we have is a V bottom. And as I had said there a few minutes ago, at best, maybe what this is going to turn into is some sort of inverted head and shoulders. So I'll be watching for that. You can sort of see it there. Shoulder, head, nice little FU move, just add insult to injury. Back to neckline. So do we have to make a shoulder come right back down to Hoag's level here? Yeah, you can see there's a big tail. In fact, actually, this huge tail probably need to explore down into there just to release any trap bears in there. But definitely this tail right here, that seems logical to me. Interesting too, we have 8s and 9s on the Tom DeMark. And of course, is this going to create some sort of 3-bar fractal fail, which would encourage the shorters to get back in on the short side. Nothing really for a guy like me to do here at all. Sort of blah. NASDAQ tech stocks seem to be outperforming. As I had said just a few minutes ago, a couple of sort of conflicting messages, I think, in the market. Number one, China and the China trade. Everybody here is breaking to new lows. I don't see any pause in this at all. And I mean, all I'm hearing is China is now sort of openly arming the Russians, sort of thumbing their noses at the Americans. And over the weekend, a Chinese ship rammed a Filipino ship. And the Americans said, hey, we're going to defend the Philippines if you start getting hostile with them. So things are ramping up. I don't see any sort of friendliness there. And frankly speaking, I don't think Winnie the Pooh gives a flying fuck about stock markets. And if anything, these are all the people that are in southern China, not the northerners. And he'd almost like to just stick it to them, like he doesn't give a fuck about people in Hong Kong. So anyway, the point being here, there's no bullishness on any of these charts. And I do find it interesting that China now does have a double top breakdown working off of the bot entry level. Of course, we were talking about bear put spreads. You can see where chaos levels suggest support should come into this market. There's no reason for me to step in front of that in here. So, you're not getting any help out of China, that's for damn sure. Also, too, not helping the stocks. I see that the Japanese yen is cranking higher here, which probably should hurt things like the Chinese stock market play. And actually, one of our site OGs has a bear put spread trade. Actually, you can see all the levels and stuff that we've talked about. Working off of this, the Japan index fund trade. I don't see any reason why this shouldn't keep working, because a lot of the Japanese companies, of course, they derive their profits from the American market. So if the Japanese yen is falling and they're selling products into the American market, when they repatriate that money back to Japan, it's more and more profits. If the Japanese yen's going crazy to the upside, obviously that cuts into profits. So I was actually, one thing that did surprise me, but I guess it kind of makes sense because this is usually what happens. They're selling the US dollar index off hard here today. But the issue here is there's no econs driving this trade. As I showed you here, if we actually look at what was coming down the pike, I mean, this is why Mondays are often a little screwy in the market. There's no news. The only news was the Chicago Fed National Activity Index. And you can see these numbers are almost negligible. Market was looking for a 0.05 reading. I think the actual number came in at like 0.02 or something. I mean, not really anything to get super excited about one way or the other. Let's see, where's our economic calendar? There it is. Monday, Chicago came in, 0.02. So, I mean, it wasn't a negative number. I suppose that's a good sign, but it did come in weaker than expectations. Is that the whole reason, the fundamental reason to justify selling this market off? I mean, there is no economic news here today. I mean, literally almost nothing. I do have a bunch. All right, there's Chris telling me I got to wind this up. Do have some econs coming out first thing tomorrow morning, so we'll keep a close eye for that. But again, kind of a dearth of econs driving the market. And then later on in the week, if I'm not mistaken, we actually have things like inflation numbers. We've got durable goods, GDP, a whole bunch of jobs data and stuff. So I get the feeling that the market's kind of on pause. And then, of course, on Friday, you can see we actually have big, ugly, the PCE, Personal Consumption Expenditure Index. That's what the Fed likes to watch the most for setting interest rate policy. That's on Friday. So, looking at this US dollar index and the way that they're cranking this market down, leads me to be, I'm a little skeptical of this. And then also, too, something that kind of jumped out at me, that was a bit of a surprise. We used to be in an environment where you had gold do well, bonds do well, and the Japanese yen do well. Are we heading back into that kind of environment? I don't know. I'm leery to get too enthusiastic about these big moves up in the euro and the Japanese yen now, because it almost feels like they're doing a bit of position squaring in the face of a lack of sort of real fundamental drivers in the market. I suppose the final thing to sort of touch on here, send you on your good way. Hey, yo, Bitcoin, Bitcoin. We are up into this wick. All these guys who bought up to top here, they're finally being released. So these guys got released. These guys got released. Here we are up in reload short zones. Looking, the market's not showing any signs of quit here. When we look at like daily price charts, I still don't think we have any big divergences or anything in our Momentum indicators, MACD histogram still powering its way higher off of making a double bottom here, following the break of a bear div. So this has got some legs. Remember, I had said that if we started getting volume trailing off here, that might be a sign. One high, two highs, three highs. I don't know whether I would say it almost looks like if we get a up bar lower than these lows here. What's that number? This is over on Stamp. Where's that number? 900. Let's call it 1,000, man, 900, something like that. If you saw that less than on the daily chart, less than 900, is that the number right? Yeah, 900. You see less than 900 coins trade on a daily chart on an up day, then it means that the buyers have probably lost interest. And the price is just too expensive. They don't want to pay that up anymore. Having said that, we are now moving through reload zones. Willie still isn't stupid. So how long can this go here? There is the lunar eclipse and there is the Fed over here. So is this moving up like the euro, like the Japanese yen in sort of this little vacuum? There's no econs. There's no Fed. Fed's like a good week and a half away. And we're in this funny little eclipse trade window. And notice that literally as soon as we entered the eclipse trade window, the market just turned on a dime and went straight up. Do we turn on a dime and head right back down once we get through this? Well, it seems plausible in my eyes. I think I told you before, I mean, I can't justify buying that kind of market. I mean, it sure looks awesome. And if you are long, great, enjoy the ride, but there's no way I can come in on the buy side here. Off of the 4 hour, sort of the swing traders, do we have any divs coming in? Oh boy, I hate when I see MACD do this. This actually is probably a really good anecdote. Considering the eclipse cycle talk, the Fed talk, we know that that's coming, everything's building to a crescendo. Usually when I see MACD do a pattern like this, it means that we are building energy. And usually the way that this resolves is there's a huge up and then a massive crash down the other side. Or there's a huge down and then a massive rally on the other side. So get ready, folks. And this makes sense because I think going coming out of the eclipse window, heading into that Fed meeting, I get the feeling that they are pushing this thing higher. You know, the news headline today is Mike Novogratz says Bitcoin ETF is a lock. So Novogratz is pretty damn good at his craft, and he's basically saying that he thinks that the ETF is a slam dunk. You can see how stupidly overbought Willie is here. You can see even RSI is overbought now, and you can see the volume is starting to trail off here. So, I think, I hate to say it, but I think this image right here, and, I mean, I suppose at some point down the road, I'll figure this out, but all I will say is usually it looks like one or the other. We are building to some absolutely horrendously volatile event coming up here. I don't know what it's going to look like, but it's coming. You can see it coming. So the next big trade window is, as I said, about a week from now. So over the course of this week, we've got that big inflation number on Friday. Maybe what you see is actually the market do some sort of big spike into that, following the inflation number release into that window, and then heading in through the Fed, the market comes screaming down the other side. I don't know, but this next week is going to be really crazy. Well, not this week. I think this week actually the market moves higher comfortably. Maybe it's on things like the energy market continuing to calm down, and maybe the commodities market's calming down. I'll end the video on a note about the stock market. And this is actually great learning information for you guys. Um, question is, where the hell do I have it? There, over here. Yeah. So I've talked to you guys about how I've noticed in my career, um, when you have the market darlings start to get into crazy ass price action, that usually is a sign that we're near the end of some sort of move. So this market darling, Nvidia, it was cranking down there, and of course we had the breadth indicator rolling over, and the ES itself looks like poop. Could we easily see this Nvidia rally back up and fill in all of this action here? As I said, we got to sort of a crescendo period. I haven't heard anything negative come out of Nvidia. So that sort of tells me that, we come down into horizontal support and resistance where the smart money put in bottoms before. And what a big surprise. You're seeing a big sort of rally off of those lows. I think probably it makes it pretty simple. You want to have a nice little tell about the market. If you see Nvidia closing below this neckline level, this support line level down in this area, and then you actually start to see some sort of market structure, it might just be an inside bar. If you're lucky, it might be a big fat M below here. Then you know the stock market's in trouble and we're probably going to crank down and fill in these gaps. And probably a really simple tell would be, of course, if this guy goes and W's out, then the stock market's fine. If that happens through this next window, you can see earnings is until way over here until, Jesus, almost the latter part of November. You might find that this guy right here will be your tell in the stock market. If we W, stock market's happy, we're heading back up top. If we crap out and lose these lows and start putting in structural failures, then the stock market's in trouble and we're probably going to come off a big chunk here. So, never a dull moment. Always a good idea to keep an eye on market darlings. And interestingly enough, on a weekly basis, speaking of market darlings, Allen just has stalled out here big time. Of course, there is that weekly outside downside key reversal. Then we have an M come in here, then a new bigger M fired. Talked about that yesterday in the video, and you can see not really much of a reaction here today. A little bit lower because, like I said, Wall Street got exercised on a whole bunch of puts right out of the gate. So, not a bad idea if you want to sort of watch for how the market, what its temperament is. See whether off of the lower time frames you get any kind of market structure bottom. See, this actually supports the bear, kind of like how you see the rally off of here, new M, and then we start heading back down. Rally off of the lows, new M's. Oh, we're going to M out? Are we going to W out? Oh, no, M, and we keep heading lower. So the fact that this is a V bottom straight off those lows, and oh, gee whiz, are they going to put in a new M here? If they do, then it means we're probably heading back down. So that might be a one to keep an eye on for sort of market sentiment. He used to be a market darling. I think he still is, but I don't know. I'm a little surprised that Tesla's basically just stopped once that weekly key reversal came in. All right, well, there's your market summary. So slow and steady wins the race. We are finally into sort of the eclipse window. We are, I think, building towards some sort of big move here. It's going to be pretty volatile around this Fed announcement. I suppose enjoy the rally while it lasts. I did hear that there were some people that were trying to take short shots against the highs. There's nothing wrong with that. I think that's a half decent place to hunt shorts. But, if you're proven wrong, don't marry a position. Just get the hell out of there and preserve capital. And as long as this thing is looking like this, there really isn't a setup for me. This message out of MACD is get ready. There's going to be some wild fireworks in the not too distant future. And I don't even want to touch something like that right in there. So we'll just watch how the fireworks play out. All right, everybody, finish off with, crude just keeps heading lower. I don't know whether we'll hit profit objectives here by the end of the day, but no real reason to touch that. And if anything, what we probably want to do is start using the 3 high low method to trail stops. So I actually don't even mind the idea of working a stop against that high now there. And we got 1 high, 2 highs, 3 highs, 4 highs defending our short now, and just let this thing work. And hey, if we're really lucky, crude just absolutely shits the bed here. Should dump it down into these levels. I don't see any reason why not. The only question is, does it happen by the end of the day? I doubt it, because we're already down a pretty big chunk. Already 2% on the day. So anyway, wish me luck. Right now up a whopping $56. Oh, I beg your pardon, up 120 on our trailing contract here. So I can't complain. Okay, everybody. Hope that was a half decent report. We'll pop on over and hang out in the after party, and maybe take some questions and maybe explore a few of these other charts in earnest. That's about it for the public broadcast. Would love to see you all over on the after party and on the site. See if you can join us. PMA for the win. Slow and steady wins the race. All the best, and bye for now.